Good morning, everybody. Mike Vaki, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, so we are locked in a battle over the daily mid-band. Bulls tried to take it out yesterday early on. The Bears fought back. The band ride has ended. You can see the two conditions for ending a band ride were met. We did not touch the lower band during all of Globex yesterday, and we took out the prior day low. It's the band touch that, or the lack thereof, that kills it. It's the taking out of the prior day low, or the prior day high in this case, that gets you on notice that it could end. And we started to see that pretty early on when the Bulls were able to push it up over 46.5 back on Monday. So that leaves us with a battle over the green line. The bandwidth is still really tight. It's under 2. So what I'm wondering is, if you establish 68 as support, and this is kind of what I was talking about yesterday, can you go up and hit this upper band? Sure. At the same time, and in the next breath, I'll tell you that if you seal off 68, you can gradually grind your way back down and deal again with the lower band. The Bollinger Bands are not blown out enough to be out of play here. What happened is what typically happens, which is the Bears just don't have enough sustained follow-through to deal with relentless dip buying. And the fact that there is relentless dip buying, you have to account for that. I came into the day yesterday long. We did very well on longs throughout the week. At the same time, when it started to peter out at about 67, we ended up getting short 67 and doing just fine. So you have to recognize the key areas, and when the key areas are either held or not held, you have to act on them. You can't get ideological, I guess is what I'm trying to say. You can't get ideological. You've got to stay flexible and go with whichever side is winning the moment or winning the day. Yesterday, for the first part of the day, for the overnight, that was the Bulls. For the regular session, once we hit 67 and we couldn't get through the daily mid-band here, that was the Bears. So in looking at an hourly chart, you can see this progression up from 24.30. That started to tire out a little bit. You had what was a lower low versus Monday, and a lower high versus Monday. You've got a marginal higher high here, and you've got some support. But you can see things are kind of starting to chop around a little bit after the big move off of the lows. Whether that's just a way station for a move higher, or whether 24.68 is going to end up going resistance and you're going to see a hard break of this 57 area, I would say is important to get down to a weekly pivot at 52. That remains to be seen. But the bottom line is the Bulls have the advantage above 24.68. So as long as we're above the daily mid-band, the Bulls have the advantage. We're at a buy dips market at that point, just as a baseline assumption. And you have to be buying those dips along with them, at least until the daily mid-band is broken and converted to resistance by the Bears. At that point, then you start to think sell rallies. So we're certainly at an inflection point. The hard part for you short-term traders out there, the hard part about doing short-term time frame trading at long-term price inflection points is that you're going to get chewed up. Don't get chewed up. Wait for the resolution, then trade it. There'll be plenty of handles after this thing has decided what it wants to do. All right, everybody have a fantastic day. I will catch you for the midday update.